Hi there. I'm going to do a video today on Airbnb's current state of business, as well as reviewing their recent Q3 earnings results to kind of decide how I feel about this stock. Is this a stock that I should add more into my portfolio? Or is this one that I should just hold off on for the time being, wait for some more results and to see how the market plays out? In terms of full disclosure, I'm not a financial advisor. I also do own a very small stake in Airbnb. It's under 1% of my portfolio currently. So I'm looking forward to diving in a bit deeper and getting a renewed opinion on the company. I'll just start off with the valuation of the company. Um, Airbnb's value has been all over the place, as you can tell by the stock chart, but it even goes before the company went public. In 2019, they were looking at going public late 2019 for 30 to 35 billion. Um, then during the early stages of uh, the pandemic, they ended up raising money at about a $20 billion valuation. And then when they ended up going public, it was at about 100 billion, and I think they ran all the way up to $150 billion value. Now, you can kind of see the downtrend in their stock since then, based off of just general market and a couple other things. But there's about 700 million outstanding shares. So the value of the company today is $60 billion. So about half of what it was, give or take, during their early stages of being public, but also about double what it is, what they initially wanted to go public for was rather. So all over the place on the valuation. It used to trade more on like a revenue multiple. Now that the company's profitable, people are talking about a price to earnings multiple a lot more. So we're going to get into all of this, but I wanted to start off with just a bit of background about the stock. They don't report lots of this information anymore. So this is back from the IPO prospectus. So a bit dated, but generally still accurate information. One of the things I really like about this company is how globally diverse they are. So they have a lot of business across the world, whether it's the Americas, Africa, Middle East, Asia, Latin America. They have a lot of different um, areas that they do business, and they do business in a significant way. So I think they're very diversified. No matter where shift in travel goes around the world, odds are that Airbnb has a presence in that market. So that's one of the really good things I like about the company, especially for a travel business. The other thing about the company is they're well diversified on type of stay. On the right hand side, you can kind of see how they break out 28 nights or more as a percentage of their business. That's like obviously more than a typical hotel stay. So lots of people are working like hybrid work, remote work through Airbnb, living in Airbnb for a month between rental properties or home ownership, stuff like that, in addition to just leisure and travel. In addition, on the left hand side, you'll see daily average rates. So, what I just want to mention here is you go on Airbnb, you see lots of properties that are priced at like $1,000 or more a night, which is definitely there, and they exist for big groups and stuff like that. But the average is at about 120 US dollars a night per room. So you can kind of get a sense that for each one of those properties that have $1,000 for a big group, there's also lots and lots of inventory that are down at $100 or under. So they really do cater to anyone's financial situation, whether you want a very luxurious vacation, whether you want of like just seeking value. They really do play across the board, which I think will prove to be very important in any economic climate that is thrown at them. Building off of that on diversification, even when you look at the top 20 cities in the world where you think lots of travel, lots of Airbnb is taking place, it's just like a sliver of their total revenue. So it just shows how they're very popular in rural areas, as well as urban and all over the world. So all of those little cities really add up and diversify the business away from any one city or type of city. Okay, pivoting into their Q3 results. So in Q3, which I believe ended September, um, they had 100 million nights and experiences booked, 25% growth rate over last year. And on that, they had gross booking value up 31%. So it seems like some um, increased pricing across the board for their hosts. The company's revenue was about $3 billion, and on that they netted 1.2 billion. So I think that's about a 40% net margin, which is very strong. And what's interesting is even though their revenue grew 30%, their net income grew 45%. So strong margins and growing with scale, which is great to see. What's also great to see is the cash flow of about $1 billion on the quarter. Um, that's really impressive for a company that a couple years ago was losing money quarter over quarter. They've really turned it around over the last 6, 7 quarters progressively and sequentially to get to this point. And they forecasted that here on out, they don't expect to have a negative free cash flow quarter in sight. So this profitability is here to stay, and they're hoping they can continue to expand it ahead of revenue growth. In terms of business highlights for Q3, um, across the board in Q3, they reported pretty positive sentiment. The guest demand on Airbnb continued to be strong despite macroeconomic hurdles in some parts of the economy and some parts of the world. Um, in addition to that, they're seeing an increase in cross border travel again, which was a big part of their business. So great to see that back. I think that was one of the things they mentioned added to the margin expansion that they saw as people were going on bigger trips, more expensive trips. Um, and people continue to stay longer, which is one of the big trends that's really like a point of difference for Airbnb versus staying at a hotel or something like that. It's more homey. It really just caters to that consumer a bit more. So that's a big trend that's going to have them continuing to grow and win share in the hospitality space. So that's great to see that soundbite, even though people are going back to work a lot more, that's still an area they're seeing a lot of growth. Lastly, they're seeing host inventory go up. I know there's been a lot of comments by hosts and in the news about people uh, speculating that host inventory is actually going down. People are pulling listings off of Airbnb, but the CEO said that he doesn't really see any of that in the actual numbers. So good to keep a close eye on that because at the end of the day, these hosts are Airbnb's business partners and stakeholders in their properties. So it's very important that they keep the the pipeline of inventory on their site in a good spot. A couple of the innovations that they've launched that they reported early success on. The first one is categories. So I have a screenshot on the bottom of just how they've kind of organized the site for people who aren't exactly sure where they want to go to start to direct volume to places that make sense and direct volume based off of the type of vacation instead of the place. Really just trying to change how people think about travel and how people think about their vacations. And they feel like this has been working out really well, been a good driver of growth for them. The second one is air cover, and this is all part of them trying to diversify their platform away from other similar platforms like Verbo and stuff like that. They really want to provide a reason that someone wouldn't need to list on half a dozen sites in terms of their properties. So air cover improves for hosts, just like from an insurance point of view, and everything else just makes it easier to be a host. And then I think they've also expanded this to the customer side, where if a host cancels on you, AirCover will cover the difference in cost and moving you to a similar or a better Airbnb in the same city, stuff like that. So it's really just high level insurance makes the experience of using Airbnb as a host or a user more worry free, and they're kind of covering that cost as a product enhancement for everyone who uses the platform. So we talked about this a couple slides ago, but you can kind of see here firsthand strong revenue growth, and then also just the disproportionate income growth to revenue growth is really impressive. So over 10 points of increased net income versus revenue growth driven by just like operating leverage and scale on the platform. Unlike lots of other big tech companies, Airbnb has not really gone crazy on incremental employees and hiring. They're staying lean and mean, and we're really seeing that show up in how well they've been able to scale the business. The other thing that I wanted to call out is they've started taking some of their free cash flow and buying back share. Now they do have a stock program for their employees. So far, the amount of free cash flow that's gotten pumped into share buybacks has just offset the dilution, which is a good start instead of us getting diluted out. But hopefully, as they continue to drive free cash flow growth and hold employees flat to slightly up, we'll start seeing the buyback program actually start reducing share count in a more significant way. The fully diluted share count, when I add warrants outstanding and common shares, is about 700 million. That's been pretty stable, give or take. There's been times where it was a couple percent higher than that, but 700 million is a good baseline for the outstanding shares in the company. Okay. In terms of their outlook, they're forecasting to have a bit of a deceleration in growth in Q4. This is one of the reasons why the stocks move down a lot, even more than the market. So they're looking at 17 to 23% revenue growth, even though they experienced 30% in the prior quarter. Some of this was expected because they had a really strong Q4 in the base. But I don't think Wall Street expected it to be that level of decline. They're kind of feeling like it would be a couple points, maybe not 10 points. So that's one of the things that's been hitting the stock down. I'm hoping that they over deliver this, but even if they don't, 20% growth, I don't think is bad in this environment for a company like Airbnb, who's already had like year over year over year of 30, 40% growth on their top line. Going into estimates for next year from analysts. So on revenue for 2023, the average analyst is assuming low teens growth. High side analysts are assuming high teens growth. So on top of the 20 to 30% growth this year, it looks like this company is going to grow somewhere between 10 and 20% again in 2023. And on that 10 to 20% growth, will probably deliver somewhere around $3 in earnings per share. So starting to really get more and more profitable year over year, and starting to really drive revenue, even if not the same growth rate on law of large numbers. So I still think it's an acceptable growth rate for the company. In terms of their income statement here, we're really seeing the same story play out. So just strong revenue growth, but then even stronger flow through to the bottom line across the board. So from an EPS net income perspective, versus what they saw in their base periods, just becoming a lot more profitable with scale. Not really much else to talk about on that. And their balance sheet. Their balance sheet was something I wanted to touch on quick because they have a ton of cash on hand, over 6 million in cash, another 2.5 billion in marketable securities. All in all, having about 9 billion in current assets, not going to count customer money that they're holding. And then in liabilities, they have about 6 billion in current liabilities, a couple billion in long-term debt. So net, their balance sheet generally nets out in terms of current assets and current liabilities, which for a company that just went public and is kind of in growth mode. I think at this stage, um, that's fine. I'm just thinking they're going to do $3 to $4 billion in free cash flow probably last year. They've done 3.3 billion trailing 12 months. So to be at 8-9 billion in debt, I don't think is too big of a deal, especially when you have it covered on the cash side of your balance sheet. Okay, so in terms of pros for this company, I really like the long term trends that they're playing into. Global travel, I think, is something that will be growing. In terms of um, remote work, hybrid work, different types of work arrangements, more people working for themselves. I think Airbnb's model and business is more catered to long term stays and people kind of working abroad and stuff like that. So I think they're going to be a long time or a long term winner on these trends. I also really like how diversified they are between domestic and global travel, rural and urban locations, different types of stays, different types of experience, wide ranges of prices. I just think they're really set up, no matter what the economy throws at them, to have a strong, sustainable, profitable business. And then I like the fact that they finally got the consistent profitability. No major swings from negative to positive, and like concerns about running out of cash or anything like that on the business anymore. And I like how they've decided to, at a minimum, offset dilution with their buyback program. Onto the cons of the business. Um, I think they're going to earn about $3 next year, maybe 250 to 3 this year, depending on how Q4 nets out. So they're trading at about a high 20s forward earnings, um, in terms of their PE ratio. So, you know, not insane, but pretty rich, even though the stocks got hit in half. Um, so that's one thing. Obviously, if it keeps trending down, the PE will continue to go down with it, but definitely not a cheap stock. But lots of the risk, I think, has probably fallen out of it to a certain extent. Even though there's been positive trends, travel still somewhat a discretionary category. No one needs to travel. So that's one thing that, depending on what happens with the economy in the next 12, 24 months, they may see some softening, especially when their business is expected to be growing consistently in the double digits. They may feel some pressures and headwinds in actually achieving that, and definitely exceeding that. So that's something to watch out. The regulatory risk is one that lots of people mention when talking about this stock. Lots of areas don't want Airbnbs, think they increase the uh, affordability issues for people that actually live and work in those communities. So that's something that um, I don't think is a massive risk, because they're in so many different markets that maybe this dilemma or this issue may cause increased regulation or them to get kicked out of a market here or there. But I don't think it'll become a widespread thing, just because so many people in these communities are making so much secondhand income off of Airbnb their properties, that I think there'll be pushback at some point. So I don't think this will be overly broad, but it is definitely a risk to some degree. And then, while not a huge concern, because I think Airbnb is really focused on differentiating their product and including points of difference with air cover and things like that, more and more of these platforms are kind of popping up to chop away at their business. Verbo's the most notable ones, but there's other ones as well. Um, and for people who have a lot of properties, there's lots of opportunities for them to open up their own website with the assistance of kind of white label sites. So that's just one thing. If this space gets more and more commoditized in terms of the technology of bringing homestays to end users, then that's a potential risk, and their take rate may have to go down, which will be a revenue headwind. So I'd say, all in all, um, I don't mind Airbnb where it's at. High 20 forward earnings multiple. I think they have years and years of double digit revenue and profit growth ahead of them. So I'd say it's fairly valued now. I think it was probably overvalued. Um, in the past when people were paying 40, 45, 50 times future earnings for them. Um, so this is one I have as under 1% in my portfolio. I may nibble on it as it goes down. I don't think I'll make this a big position, but I definitely do feel like lots of the significant risk of a 50% drop from here or something like that has been wiped out with the current drop. So you're getting the potential upside in this company really taking over from the trends that we talked about with maybe a bit more minimized risk. So I think the risk reward um, is appealing, but not something I'm willing to jump all in on yet. But we'll keep monitoring the price, see if it's something that I make a bigger part of my portfolio. But I think I'll just average in a bit here and there on stock weakness.